Raise your hand if you've ever opened an investing app, stared at it for 10 minutes, and closed it without doing anything. Yeah, same. Here's the truth. Starting your first investment is not the complicated, terrifying thing your brain has turned it into. It's actually one of the simplest financial moves you'll ever make. You just need to know where to start. Most people think investing is for people who already have money, people in suits, people who know what a PE ratio is. But that's not how it works anymore. You don't need a financial advisor. You don't need $10,000 sitting around. You don't even need to know what the stock market is doing today. You need 3 things: a little money, a brokerage account, and 5 minutes. Let's talk about the money first. The number one reason people delay their first investment is they think they need a lot of it. They don't. Most platforms today let you start with $1, literally $1. Fidelity, Schwab, M1 Finance, 0 minimums. So the "I don't have enough money to invest" excuse? Gone. Whatever you have right now, even $20 a month is enough to start. The amount matters less than the habit. Here's why that matters. Compound interest is not a finance term. It's a time machine. When your money earns returns, those returns start earning returns too. A $50 monthly investment starting at age 22 grows to roughly $175,000 by age 62 at a 7% average annual return. The same $50 a month starting at age 32 gets you about $85,000. Same money, same discipline. 10 years earlier is worth $90,000 extra. That's not motivation talk, that's math. So the second thing you need is a brokerage account. Think of it like a bank account, but for investments. Opening one takes about 10 minutes online. You'll need your name, address, social security number, and a way to fund it. That's it. No interview, no minimum balance in most cases. Fidelity and Schwab are solid starting points. Low fees, clean interfaces, no nonsense. Once it's open, you link your bank account and transfer whatever amount you decided on. Now, the third thing. What do you actually buy? This is where most beginners freeze. They think they need to pick the right stock. They don't. In fact, trying to pick individual stocks as a beginner is one of the fastest ways to lose money. Instead, start with an index fund, specifically something that tracks the S&P 500. The S&P 500 is a basket of the 500 largest companies in the US: Apple, Microsoft, Amazon, and 497 others. When you buy one share of an index fund like VOO or FXAIX, you own a tiny piece of all of them. Instantly diversified, no research required. The S&P 500 has averaged roughly 10% annual returns over the last 50 years. Not every year. Some years it drops, some years it soars, but over time, it goes up. And you don't have to time it. You just have to be in it. That's the whole strategy. Buy consistently. Don't panic when it drops. Keep going. Here's the move. Set up automatic contributions. Pick a day, let's say the first of every month. Set your brokerage to automatically pull $25, $50, $100, whatever fits your budget, and invest it into your index fund. Then forget about it. Don't check it every day. Don't react to headlines. The people who check their portfolios the least tend to outperform the people who check them constantly. Boredom is actually a superpower in investing. One more thing. A Roth IRA is a type of account, not an investment itself. If you have earned income and you're under the income limit, open a Roth IRA instead of a standard brokerage account for your first investment. Your money grows tax-free. You pay taxes now on what you put in, and you never pay taxes on the gains. Ever. On a 40-year investment, that tax-free growth is worth tens of thousands of dollars extra. It's the single best account a young investor can have. So here's the full play. Open a Roth IRA or brokerage account today. Fund it with whatever you have. Buy an S&P 500 index fund. Set up automatic monthly contributions. Then leave it alone and let time do the work. You don't need to be rich to start investing. You just need to start. Every month you wait is a month of compound interest you'll never get back. The best investor isn't the smartest one. It's the one who started first and stayed consistent. That's you now. Go open the account.